Excel accounting practice problem. Pay employees form part number 2. Get ready because we're about to excel with Excel. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, 2 tabs on down below, example and practice. Example tab in essence being an answer key. In prior presentations, we put together this worksheet from a blank sheet, which is a good practice problem to do. Now, we're going to be using this worksheet in order to record the transactions journal entries behind the payroll process when thinking about recording the payroll process, which if done in QuickBooks might look something like this. Processing the payroll for our employees, hopefully the generation of the checks being somewhat automatic if we have set up the payroll process properly, then generating those checks, providing the pay stub, calculating the gross pay, the withholdings from it, the net paycheck, as well as the employer withholdings, posting all this information to the trial balance and the balance sheet and income statement, financial statements properly. Going back up top, last time, I'm going to increase the size up again to 140. We thought about the supporting worksheet, which you could think about as, in essence, a type of subsidiary ledger, which will record or help support the transaction that we will be recording now. We did that all the way on the right over here. So all the way on the right, we've got the subsidiary ledger way out here. We're going to use this information now to be constructing our journal entry. To do that, I would like to hide a bunch of columns all the way back till we get to the trial balance. I'm going to put my cursor on this column right to the left, and then select all the way back, highlighting all the columns till we get back to the trial balance, the TB. So here we are at the TB. Let's leave column J open. Right click on that selected area and hide that information. So now we've got our information right next to where we're going to be entering the journal entries on the left-hand side. When we did this calculation, we're thinking about 2 employees to keep it fairly simple, noting that increasing the employees adds to the complexity greatly. If you think about each individual employee, you could probably imagine this on your paycheck stub or have seen something similar. Gross pay, we're going to say $5,000 for employee 1, FIT, federal income tax withheld, $750, Social Security, Medicare withheld, and then benefits withheld. Net check then being something less than what was earned. Same for employee 2 with different payroll numbers, of course. We can think now, when we record this to the system, of it as being recorded as basically 2 checks, which would be done in the accounting software if you're processing payroll within the software, because it would have to generate the 2 separate checks. Or you can think of this as a sub-ledger that's kind of backing up and supporting the information. Possibly you could think about that situation happening with a third party, like a Paychex or an ADP, helping you to process the payroll, entering it then into the system with one transaction, making it kind of like a one check or one journal entry transaction, thinking of, in essence, all the employees as if one journal entry or one employee, recording it that way, simplifying the recording, getting the financial statements correct, and not having as much detail like in the accounting system, the more detail being provided by these ledgers that would be provided possibly by third-party employee or payroll providers. If you were to use that method, however, you do have to recognize that these are checks that would be coming out of your account, and when you reconcile, then you have to reconcile to what's going to happen on the bank side, which is going to be on a check-by-check basis. So you got to make sure that you can do that reconciliation process in that format. Then we have our taxes that we're going to have to pay over and above, which at the point in time that we process the payroll, we're not paying them. We are kind of incurring the taxes at that point in time, not based on our income, but based on the employee's income, which is going to be the matching of Social Security, Medicare. And so we could have federal unemployment tax as well. But I'm going to keep it, somewhat simple. Federal unemployment tax is not as big of a tax, and we'll just get an idea of what is happening on here. We also, of course, could have state taxes too. And that means that the total liabilities that are going to happen as a result of this is going to be the federal income tax for the employees, the Social Security and Medicare for both employee and employer portion, the benefits that are for the employees. Total liability is going to be at the 3803. let's think about how we can construct this. I'm going to make this first part as if we're going to construct this journal entry as if we only have one journal entry instead of doing two journal entries for each employee, as if, in a sense, we only have one employee with the totals on down below, and then we'll think about the employer taxes. So let's go back to the left-hand side. We're going to say, let's imagine this happens on 6/30 here. We're also going to be adding some accounts as we go because we don't have these accounts in our sheet yet. So I'm going to add them too as we go. So I'm going to go up top, and first let's add the payroll items. So I'm going to call this payroll expenses. We do have payroll expenses here, so we're going to add that. That's going to be the debit for payroll expenses. And the payroll expenses is going to be for the gross amount that they got paid, even though they didn't actually get paid that amount. But in theory, they're going to get that amount, and we're going to pay these other people kind of on their behalf. So they got, then our expense is going to be the $11,250 and the payroll expense. So in essence, that payroll expense represents their portion of the taxes already. We're recording the expense, but nope, we're not recording these expenses that we're taking from them in another account. That would be some other account of expenses like payroll taxes expenses. We're recording this gross amount, which includes those things in it, as the payroll expense. And the reason for that is because these other things that we will be paying for taxes and benefits are not in theory our money. They're the employee's money. We're just paying that to these other people on their behalf. That's the idea of it. So then we're going to say then the other side is going to be a liability account, which I'm just going to call payroll liabilities. So the payroll liabilities, you do have some more options with payroll liabilities. You might break out payroll liabilities depending on the different types of liabilities you have. For example, you might want different payroll liability accounts for the FIT, Social Security, and Medicare. You could possibly break out the employee and employer portion, although that's not as common. You might break out another liability for the benefits, which is quite common as well. I'm just going to put all the liabilities into one account that we're just going to say these are all the liabilities that are being generated as we process the payroll that we're going to have to pay later to these entities, including the Fed and the benefits, whoever the benefits are going to, possibly the 401k or the Medicare or medical expenses or something like that, insurance. I'm trying to say, that's what I'm trying to spit out. So I'm going to say this is the negative SUM of the items that we're withholding from the paycheck in aggregate, which is going to be the FIT, Social Security, Medicare, and the benefits. Closing that up. So I'm just adding those up and flipping the sign. And then the difference is the check that is going to be coming out. This is going to be the checking account. We'll call it the checking account. And I'm going to have this the negative sum or plug formula, negative SUM, pulling out the checking account. That 8308 should match the net checks, which is going to be the 8308. So there we have it. Note that this 8308 now is being recorded. We're going to record that as one transaction in this format, when in actuality on the bank statement, it's going to be two checks. So that means when we reconcile our bank reconciliation, we got to make sure that we can account for that. It adds a little bit of a complexity in that sense. So then we're going to debit this item, or increase the alignment, and increase the indenting of it. Then we're going to have another transaction happening at the same time, cash not being impacted for our portion of the payroll taxes. So I'm going to call this a different kind of expense, payroll, which we're going to have to add payroll taxes expense. And then it's going to also be increasing the liability for our portion. This first one is the tricky component right here, because it's going to be different than the payroll expense, which represents basically the earnings of the employees, even though that includes their taxes that they're going to pay, well, we're going to pay, but out of their money. We took their money to pay it. These are our taxes based on their wages that we're going to put into another expense account called payroll taxes. So that's going to be for the total Social Security and Medicare for our portion, over and above what we pay the employees. There's the debit and the credit there. So of these two transactions then, then we're going to have that are happening in essence at the same time. These two are hitting the liabilities. That's the total liabilities of the 3,803 that we calculated down here, that we expect to be an increase in the total liabilities. That is in part what we're taking away from the employees that we have to then pay on their behalf, and our taxes that we owe, not based on our income, but based on the employee income. And that's going to be the difference there. And these two accounts here are where often people get confused, this breakout of the expenses between the payroll expenses and the taxes, because you start to think that this taxes expense should include all the taxes that we're going to pay, which is going to be these taxes and these taxes. But no, because these taxes we're paying up top, we've recorded as an expense when we recorded the pay of the employees, because the employees earned the 11,250. These taxes that we're forced to take from them and pay are actually their earnings that we're just required to act as a collection agent and pay on their behalf by the government. These taxes are taxes to us, meaning these are taxes that we actually owe over and above their gross pay, because we have to pay the payroll taxes. So that's why they're payroll taxes. And these taxes on the expense side represent payroll expense because they're part of the gross pay. So that's going to be the idea. If we go back on over here and record this out, then let's record this out. And also just realize that this is clearly simplified for a couple different reasons. One, we're recording this in aggregate. If you did this in QuickBooks, it would record check by check, as we looked at. And two, note that we're not adding the payroll taxes for the state taxes, which in the United States could differ from state to state. We're also not looking at the federal unemployment taxes. And note that also when you process the payroll, you're going to have to be providing this information to each employee on the pay stub, giving both year-to-date numbers as well as the payroll for the current time period. So that all of that reporting kind of information you can think of it be done outside as a third party, or be done within the QuickBooks system, having help within the QuickBooks system. Our focus here is to get an idea, kind of like the accounts that would be affected within the payroll from a journal entry standpoint. Okay, so let's post this out. We're going to say the payroll expense first. Let's make this green so we could focus in our eyeballs on that one. Payroll expense, down below, we got payroll expense is going to be equal to getting that 11,250, bringing it up. Then we've got the payroll liabilities is going to be the liability. We don't have that yet. So I'm going to add, we do have payroll liabilities. It's right here. Payroll liabilities is right there. So I'm going to say this equals the payroll liabilities. And then that's going to be in the middle. This equals then the 2,942. And then the checking account is going down. Checking account going down. And so there we have that. Liabilities go up, checking account goes down, and we're back in balance with the green zeros. And that expense made the net income, this is income not a loss, go down by the 11,250 to the 13,460. Now let's record the other journal entry, which happens at the same time. But it's nice to break them out in two entries since they both balance. So we're going to then say the next one. I don't need to make it green. The payroll taxes, this is the one we have to add down here. We don't have it. You could put them into the payroll expenses as well and say, hey, they're all payroll expenses, taxes and expenses. But typically you want to break out the taxes if you're going to break out the two categories. So that's what we'll do here. And it's also the category that causes the most confusion oftentimes. It's also nice to understand this because at the end of the year, when you're trying to verify payroll, you'd like to tie this information on your books out to the payroll tax forms, including the 941s, the 940, the W-2 and W-3 forms. So let's go ahead. I'm going to select these four cells and then right click on them and insert so I can put another row underneath them and shift those cells on down. And then this is going to be the payroll taxes, starting at 0. I'm going to start it at 0, even though there's something in it from the prior period, but we're going to start it at 0 for the example problem. Pull this down, summing across, and then we'll say, okay, so that means payroll taxes is going to be equal then to the payroll tax up top. And then the liabilities also going up again. Liabilities going up again for our portion, which we have not yet paid, but are incurring as payroll is processed. We'll double click on it, plus the 861, increasing it, putting us back in balance here. So that means if we compare this to basically our data on the right-hand side, the checking account went down by the net check for the 2 employees over here, which is the 8308. So that makes sense. And then we had the payroll expense go up, not for the net pay, but for the gross pay, because that's what they actually earned. And then we're going to be paying their payroll taxes and benefits on their behalf. That's why we didn't give them the gross pay, because we're going to pay these other people on their behalf with their money in it. That's the theory of it. And then we had our taxes that we paid. So these are the payroll taxes going up for our taxes over and above, and the total amount of liabilities that are going up for the FIT, Social Security, Medicare, and benefits that have been incurred, which have not yet been paid. They've been incurred by either us taking them from the employee, Social Security, FIT, for example, half of Social Security, half of Medicare, and the benefits, and our portion, which is the Social Security, Medicare in this case, giving a liability of the 3803 that we're going to have to pay to the government and the benefits in the future, which we grouped into just one payroll liability account at the 3803. Let's go ahead and post this out. So I'm going to unhide some cells here so we can see the general ledger. Then we will post it out, putting my cursor on I, column I, dragging over to CP, letting go, right-clicking the selected area, and we want to unhide now. So we're going to unhide and then post this out. So back on over to the left, I'm going to make the first one green so we can see it a little bit more clearly, focus our eyes on it as we post it to the GL. We're looking payroll first, which is like one of the third to last liability. It's in the same order on the GL. The assets in green, liabilities in orange, equity dark blue, and then we're in the income statement. We're looking for the payroll expense down here on AQ17. This is on 630. We're in AR17 equals, holding the left arrow till we hit the wall. Boom. And then we're going up to that payroll expense in C2 and enter. So there we have it. 8,000 goes up by the 11,250 to the 19,250. That 19,250 should also be on the TB trial balance. It is indeed. We're out of balance on the GL till we record the rest of it. Payroll liabilities then. Second liability account. Going on over the GL, assets in green, liabilities in orange. We're looking for that second liability account. AA5 is on 630. Date, we're in AB5 equals, left to the wall. Picking up that 2942 and enter, bringing the liability up to 2942. That 2942 matching the TB on the, well, not yet, doesn't match yet the TB because we have to record the second side. We're still out of balance on the GL up top. Let's record then the checking account going down. Notice that 2 checks are actually happening. We're making the checking account go down by 1 transaction, 630. And so we got to be careful when we reconcile. In that case, we might want a different checking account in practice for the payroll to make that a little bit easier to deal with. But here we go, checking account going down by the 8308 from 100,000 down by 8308 to the 91,692. So there is that. There could be rounding involved here, by the way, but we'll keep that there. That's what's matching on the TB. We're in balance, but we're not matching on the net income till we record the other side, including the payroll expenses. So now we want the payroll taxes expenses, which we don't have on the GL yet. So we got to add that to the GL, which it will be on your worksheet, but I'm going to practice adding it. If you're building your worksheet from scratch, we'll practice adding the payroll. So that's right here. So let's do it. I need to go like right after the payroll on the GL. We're going to go over to the GL and say we've got payroll over here, and here is the payroll expense. So I want one right after it right there. I want that to be payroll taxes. So what I'm going to do is put my cursor on the little skinny cell and drag on over to AW. And then I want to insert some cells there. Right click, insert some columns, putting some columns in place. And then I want to get rid of the formatting. So that little paintbrush format, I don't want any formatting yet because I'm doing my own formatting. And then we're going to put our cursor on this cell, the skinny cell, to AS. And then we're going to right click and copy those and paste that in AT. Right click and paste it. Right click and paste it. Well, I'm just going to say Control V because the right click and pasting is being stubborn. So there we have that. And so I don't want anything down here. The second one is blank, so I'll just leave that one blank. I'll leave that blank thing there. And then up top, this is the one we want. I'm going to say this equals. Scroll all the way on over to the trial balance, picking up the payroll taxes. Payroll taxes. There we have it. And so there we have it. And then we're going to say the date here is on 6/30. This is going to be equal to, scrolling on over to the amount, payroll taxes 861. There we have that. But we also have to add it to our check numbers up top in the GL. So this GL needs double clicking here, going to the end of it, plus we got to add our new GL accounts in that giant formula. So we're going to say that this one, payroll taxes, right there. And then I haven't added anything to this one, but if I add anything there, I want to add that one too. I'll just add that 0, 2. And so there we have it. It's out of balance till we record the other side. This one also needs to be included. So we got this long formula, and that needs to be, this same cells need to be included there too. So we're going to go back on over. This is comparing the income statement for the payroll taxes, this one and this one. Okay, so that should do it. Now let's go back on over, record the liability side of things, which is going to be the second liability account. So we're scrolling over, green assets, liabilities, yellow liability account on 6/30. This is going to be equal to an AB6 equal to, left to the wall, picking up the 861. There it is. So it goes up by those two journal entries that both increase the liability, bringing it up to that 3803, that matching what's on the TB, also matching the TB, putting us back in balance on the GL. Let's ungreenify this item right here, ungreenify or bluify it, whichever way you like to think about it, ungreenify or blue. My right click is not working properly, which is frustrating. Okay, so then let's fix the financial statement because we're going to have to add this account down here to the financial statement for the payroll taxes. To do that, we're going to put our cursor on column J and then select all the way over to our financial statements, the balance sheet, so we can see them side by side and make some adjustments to them. So we're going all the way to CB, right click on that selected area. The right click worked, very nice, and hide that stuff. So there we have it. Then on the income statement, we're going to have to add that one account. I thought we were going to have to add a few, so this isn't too bad. It's got to go under the payroll expenses. So I'm just going to select these cells, right click on it. It doesn't want to right click. The other way you could do it is I can just cut these, cut that stuff, Control X, and paste Control V right there. And then I'm just going to say this is going to be equal to the payroll taxes, payroll taxes expense. And that is going to be the number of that 861 that we're off by, 861, there it is. Let's do some format painting, select the one above it, go to the home tab, clipboard, paintbrush, paintbrushy, brush that paint down. Paint, we have blue paint, we made it blue. Summing that up, that looks good. So now that 12599 matches the 12599 on the TB as well, back in balance on the balance sheet. So if we were to kind of look at this in the system in QuickBooks, then we would probably enter the payroll. Then we would go in here and say, okay, did everything work the way we think it should? Possibly looking into something like the payroll liabilities, let's say, double clicking on the balance sheet account of payroll liabilities to see the detail. I'm going to unhide some cells to do that. That would be going to the general ledger, going from I to CD, left click, unhide, payroll liabilities. Then over here, we drill down. This would be similar to the transaction by account or transaction detail report. Seeing that detail, then we might say, I'd like to see more information about this account, breaking out the payroll for that period. Then we might go to other payroll reports that would be kind of like subsidiary ledgers, although quite detailed, because the payroll could be quite detailed for it. And or we might go to reports if we were to do the payroll outside of the accounting system in a third party like an ADP or Paychex, and look up the reports that would be supporting that, that transaction number, the schedules that we put together, which would give us things like the total net check, the gross pay that we can tie out, the employer payroll taxes, and the liabilities that were calculated.